regulation is always a big theme at Sibos. So to talk more about it, I'm with Thomas Zeeb, the CEO of Securities. So Thomas, at this conference, a lot of people have been talking about Target 2 securities. So where are we at now? Can you bring us up to speed?
We're at the moment in the testing phase for wave 1 of T2S. The banks, I don't know exactly where the other CSDs are. We've certainly initiated the testing with the ECB. Testing appears to be going reasonably well, and I'm comfortable that we'll be ready for the June 2015 start to be live in T2S.
So can we expect a big bang moment in June 2015?
No chance. I mean, let's face it, the market, the Swiss inclusion in T2S is a little bit different than the other markets that are being forced to go into T2S, because the Swiss franc as a currency is not in T2S itself. So as a result, clients will still have the option of settling Swiss securities either in Swiss francs in the domestic market or in euros in Target 2 securities. And it will take some time before we see, I think, significant shifts. On the other side of the fence, the ability for clients to settle securities in the Eurozone countries over T2S is somewhat limited just because of the markets that are coming on stream in the first phase. They're not the big ones. When the big players come on board in wave 2 and 3, then I think we'll start to see the real impact.
So what are the other topics of discussion that you've been talking about while you've been here in Boston?
The big one is, and the most overriding one is, of course, regulation. What are the issues around segregation of accounts, perhaps looking through to the final end beneficial owner? These are issues that are not easy to resolve, because technically it's an extremely expensive and difficult thing to implement. But there's a requirement, or increasing requirement, from regulators to understand who the end beneficial owner is. And I think one of the challenges that we as an industry have is how do we deal with that going forward.
Okay, and you're based in Switzerland, so I understand there are some issues with your regulator. You have a regulator in Switzerland, and then you also have to deal with equivalencies in the EU. So what does all this mean? Is it a bit of a headache working out what regulations are equivalent to your home market and Europe, rest of Europe?
It's less an issue of working out which regulations are equivalent as it is ensuring that the Swiss market regulation is equivalent to what exists in the EU. And a decision was taken some years ago that these sorts of EU legislative directives would be incorporated into Swiss law. So as a result, both the Swiss National Bank with their National Bank Ordinance, as well as the FINMA, our regulator, with the Financial Markets Infrastructure Law, are creating or have created an environment which covers off the regulatory environment in Switzerland to be equivalent to what is required in the EU. And that's well underway. The National Bank Ordinance was put into place last year. The Financial Market Infrastructure Law is coming in 2015, but already overlaps quite significantly with what's been done on the National Bank Ordinance. So I'm comfortable that from a factual, from an objective point of view, the Swiss market is already equivalent, or indeed goes beyond the requirements of the EU.
Okay.
Where there are issues are on the political front. You know, the whole debate about the bilateral contracts between the EU and Switzerland impacts to some extent the decision making within the EU around the about giving the official status of equivalence to Switzerland. That's one of the poker chips that's currently being played with.
So does this affect your strategy for growth if you're sort of expanding beyond Switzerland?
Well, we're already very active in the EU and in about 65 markets worldwide. So yes, it affects us. Yes, it's a concern. I'm reasonably comfortable that we will find a solution and that it's not going to impede our ability to continue to expand outside of Switzerland.